Welcome to my YouTube channel. In this video, we will talk about important to financial literacy. What is financial literacy? Financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. When you are financially literate, you have the foundation of a relationship with money, and it is a lifelong journey of learning. The earlier you start, the better off you will be, because education is the key to success when it comes to money. Understanding financial literacy. From about 2000 to 2022, financial products and services have become increasingly widespread throughout society. Whereas earlier generations of U.S. residents may have purchased goods primarily in cash, various credit products are popular today, such as credit and debit cards and electronic transfers. A 2021 survey by the Federal Reserve Bank of San Francisco revealed that 28% of all payments were via credit card, with only 20% being made in cash. Given the importance of finance in modern society, lacking financial literacy can be very damaging to an individual's long-term financial success. Even so, research shows that financial illiteracy is very common, with the Financial Industry Regulatory Authority, FINRA, attributing it to 66% of Americans. Being financially illiterate can lead to a number of pitfalls, such as being more likely to accumulate unsustainable debt burdens, either through poor spending decisions or a lack of long-term preparation. This, in turn, can lead to poor credit, bankruptcy, housing foreclosure, and other negative consequences. Thankfully, there are now more resources than ever for those wishing to educate themselves about the world of finance. One such example is the U.S. government-sponsored Financial Literacy and Education Commission, which offers a range of free learning resources. Scope of financial literacy. Although many skills might fall under the umbrella of financial literacy, popular examples include household budgeting, learning how to manage and pay off debts, and evaluating the trade-offs between different credit and investment products. These skills often require at least a working knowledge of key financial concepts, such as compound interest and the time value of money. Other products, such as mortgages, student loans, health insurance, and self-directed investment accounts, have also grown in importance. This has made it even more imperative for individuals to understand how to use them responsibly. Financial literacy can cover short-term financial strategy as well as long-term financial strategy, and which strategy you take will depend on several factors, such as your age, time horizon, and risk tolerance. Financial literacy encompasses knowing how investment decisions made today will impact your tax liabilities in the future. This also includes knowing which investment vehicles are best to use when saving, whether for a financial goal like buying a home or for retirement. This is not to add the novelties in finance such as e-wallets, digital money, buy now/pay later P2P lending, and other new financial products that can be convenient and cost-effective, but require potential consumers to be educated to assess them adequately to their advantage. Why financial literacy matters. From day-to-day expenses to long-term budget forecasting, financial literacy is crucial for managing these factors. It is important to plan and save enough to provide adequate income in retirement, while avoiding high levels of debt that might result in bankruptcy, defaults, and foreclosures. In its Economic Well-Being of U.S. Households in 2020 report, the U.S. Federal Reserve System Board of Governors found that many Americans are unprepared for retirement. More than one-fourth indicated that they have no retirement savings, and fewer than 4 in 10 of those not yet retired felt that their retirement savings are on track. Among those who have self-directed retirement savings, more than 60% admitted to feeling low levels of confidence in making retirement decisions. Low financial literacy has left millennials, the largest share of the American workforce, unprepared for a severe financial crisis, according to research by the TIAA Institute. Even among those who report having a high knowledge of personal finance, only 19% answered questions about fundamental financial concepts correctly. 43% report using expensive alternative financial services, such as payday loans at pawn shops. More than half lack an emergency fund to cover 3 months' expenses, and 37% are financially fragile. defined as unable or unlikely to be able to come up with $2,000 within a month in the event of an emergency. Millennials also carry large amounts of student loan and mortgage debt. In fact, 44% of them say they have too much debt. Though these may seem like individual problems, they have a wider effect on the entire population than previously believed. All one needs is to look at the financial crisis of 2008 to see the financial impact on the entire economy that arose from a lack of understanding of mortgage products, creating a vulnerability to predatory lending. Financial literacy is an issue with broad implications for economic health. Benefits of financial literacy. Holistically, the benefit of financial literacy is to empower individuals to make smarter decisions. More specifically, financial literacy is important for a number of reasons. Financial literacy can prevent devastating mistakes. Floating rate loans may have different interest rates each month, while traditional individual retirement account (IRA) contributions can't be withdrawn until retirement. Seemingly innocent financial decisions may have long-term implications that cost individuals money or impact life plans. Financial literacy helps individuals avoid making mistakes with their personal finances. Financial literacy prepares people for emergencies. Financial literacy topics, such as saving or emergency preparedness, get individuals ready for the uncertain. Though losing a job or having a major unexpected expense are always financially impactful, an individual can cushion the blow by implementing their financial literacy in advance by being ready for emergencies. Financial literacy can help individuals reach their goals. By better understanding how to budget and save money, individuals can create plans that set expectations, hold them accountable to their finances, and set a course for achieving seemingly unachievable goals. Though someone may not be able to afford a dream today, they can always make a plan to better increase their odds of making it happen. Financial literacy invokes confidence. Imagine making a life-changing decision without all the information you need to make the best decision. By being armed with the appropriate knowledge about finances, individuals can approach major life choices with greater confidence, realizing that they are less likely to be surprised or negatively impacted by unforeseen outcomes. Make sure to watch the full video. Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.